Welcome back to the Pie Podcast. I'm your host, Irene. As usual, share, like, and subscribe. So today's conversation is going to touch on a very sensitive topic. From a financial perspective, it's something that we need to think about. There's conversations that make us very uncomfortable, conversations that we really don't want to have, but conversations that are beneficial for us to have. Approach them with sensitivity and approach them with empathy as well. So we may have heard recently of the passing of Charlie Kirk, a 31-year-old American political activist, the founder of Turning Point USA. He was at work on a normal day, nothing particularly different about this day, and it just so happened that would be the last day that he would be on this planet. He was assassinated, and it reminded me of an incident last year at my local train station where I woke up one morning to find that a man had been murdered in the early hours of the morning. And I remember specifically that day thinking he didn't know that he was going to pass away. He was going about his business. There must have been people expecting him home and he didn't turn up. And it's the same thing for Charlie, thinking that he turned up to his day-to-day job with the idea that he was just going to debate students as he usually does, and that at the end of the day he'd either be traveling to his next destination or going back home with his family. But unfortunately for him, that was not to be the case. And so it got me to this very difficult space. And when I have this conversation, I don't have this conversation with any level of insensitivity at all. I think when somebody has passed away at such a young age, it's very difficult. It gets people thinking. It got me thinking for sure. And it was really good to see that he was a very intentional person. Even less than 2 weeks after his passing, we see that his wife was appointed CEO of his organization, which means his legacy gets to be passed down to his wife and to his children. We see that he'd informed his business partners, board members, that was his wish, that should he pass away, that his business should be passed on to his wife, Erica. And that's exactly what happened. It was a seamless process. It was smooth. Anyone who's been watching on what's been with Turning Point USA, you can definitely attest to that. And so to think that a man of 31 years old was so prepared for the end, it just really got me thinking that actually there's two things that we can be certain of in life. Death and taxes, definitely two things that we can be certain of. And we talk about taxes, we can groan about taxes, we can complain about taxes, we can have protests and riots and march when it comes to taxes, because we can point a finger to somebody else and say, hey, government, those taxes are unfair on us. We want you to do something about it. So go ahead and fix it. That's a comfortable conversation for us to have. But when it comes to death, we are all guaranteed that death is something that is going to happen. However, with that said, it's difficult for us to have our house in order, because what does that mean? It means pointing this way as opposed to that way. It's like, what is my responsibility around this specific aspect of life? This is a given aspect of life. It's going to happen. What is my responsibility around this as an individual? So we think about building generational wealth. We think about our investments. We think about everything that we're going to do, how we're going to save our money. We think about how we're going to buy our houses, but we don't think about the end and how that's going to happen, and the things that we need to put in place to make sure that when you do get to that point, you are financially sorted out. So today's episode is going to cover death from a financial perspective. We're going to talk about legacy, and we're also going to cover protection. And so if it's a conversation that you would like to have with your loved ones, with your families, with your friends, then by all means, it's not an easy one to start. Perhaps maybe share this video. And this is not to, get people watching this and like following the channel or anything like that. That's not the point. The point in this is to send out this video because you want to have this conversation, but you don't know how to start it. It's a very sensitive topic. You need to be careful with how you introduce it. You want to be sensitive to people and you want to prepare them for the conversation, right? And so we can begin by talking about protection. So from a protection perspective, there's several things that you can put in place, mainly around insurance. You can have your life insurance, which pays out in the event that you do die. And I will say with insurance policies, definitely look at the small print because you don't want to buy a policy that when it comes to the point of you benefiting from that policy or your family or loved ones benefiting from that policy, it doesn't actually cover what you intend for it to cover. There's health insurance, which covers you in the event of any ill health. So, say for example, you're unexpectedly taken into hospital and you're very poorly. Thinking about where you're going to get the finances from is another challenge altogether. And so, if you do have a health policy, a health plan in place, that's actually going to support you in that process and take care of your expenses. It takes away the headache from your family. It allows people space to breathe and to care for you. Get a policy that is going to cover you in different eventualities. Now, we're seeing more and more young people dying of diseases such as cancer, which it's not really expected, but it's happening. And in the UK, because we have free national health care, we get treated for many things for free, which is absolutely fantastic. But then there's certain things, for example, if you're presenting with certain symptoms, then it may not cross the doctor's mind that this is something that would potentially lead to a diagnosis such as cancer. And so, because they're not going to do that test purely because of your age, it means you're at a disadvantage. So, what can you do for that? There's private health insurance policies. Now, there's private companies, and many people who work with private companies, you will find that your employers do provide health insurance, and you are asked to perhaps subsidize it a little bit so that you can get that level of protection and that level of cover should you need it. And so if you do end up going down that route, then you will find that if you do present certain symptoms and you go to the private healthcare provider versus the NHS, you're going to find that with the private healthcare provider, they're going to dig in a lot deeper. They're going to do more thorough tests because you're paying for it and your employer is subsidizing that cost. And so you're probably bound, well, not probably, you're likely to get a better level of health checks because you have that level of cover. And so for people who think that, yeah, I don't need this because I've got the national health cover. Actually, if your employer is offering health insurance and you can subsidize it, or if you actually can afford private health insurance, then I would definitely say it's something that you do want to think about. The type of insurance that you might think about taking out is mortgage protection insurance. Now, these insurance covers tend to cover your perhaps your mortgage. So if there's any outstanding payments to be made as a minimum, that will be covered. And thinking about these policies just means that in the event that you do die and you're the one who's responsible for making those type of payments, making sure that your family has a home, it just means that the insurance policy is going to pay out and they're then protected. They don't need to worry about where they're going to live because that is going to be paid off. And in addition to grieving you, they don't have to worry about where they're going to live or the finances surrounding that aspect of things. Now, moving on from insurance, the next point to mention is your will and your inheritance. So, anybody who's employed or who's earning some sort of income or self employed, you need to have a will in place. And the first thing that I would say is if you're somebody who's in receipt of a pension, you need to nominate a pension beneficiary. So with your pensions, you can name anybody that you want. You can name your cousin, you can name your friend, you can name your brother. You can even distribute these funds to your family in terms of dependents or just your relatives in general, or your children, your wife. It's up to you what you want to do with that, and that will be paid out. Even in the event that you do pass away and your spouse continues to live, then your pension is paid out to them. Now, when it comes to your will, your pension will sit outside of your will. It's not taken into account with your will. So don't think that if I write a will, it covers my pension unless you specifically say that my pension is going to go to so and so. But with your pension, you can have a nomination and that goes separately, right? So when it comes to your will, it's important for you to have somebody who knows about the assets that you have and who knows about the distribution of your will, right? This could be from a legal perspective, but it's also beneficial to have it from a personal perspective because we've had of so many cases where people pass on and different family members come in to grab assets and take what's not theirs, and there's so much contention around it. You have to take things to court, and so you find that lawyers are actually benefiting much more than the family because you have to pay the lawyer a fee. If you're going to take people to court, if they're going to defend your case, then they're going to require payment from it. And where is the fee coming from? More than likely, it will come from the deceased estate. And so by not um, having the right will and testament in place, it means that your estate is left in what's called intestacy, where there's no beneficiary, and people can then begin to crop out of the woodwork and contest for assets. But more importantly, it's the fact that you, as an individual who has worked so hard for what you have, I would like to think would have a preference in terms of how you want your estate to be divided. And so it's for the people who are the executors of that will who are then in a position to fulfill your wishes. So the good thing and the right thing to do is to give them instructions on how to do that and avoid this whole complication. This is not supposed to be the norm, contesting for wills. It's not supposed to be the norm, dragging families into court. It's not supposed to be the norm, having so much animosity when somebody has passed away because the will now becomes a contentious point, right? So have your power of attorney in place and have your will in place. So the power of attorney has the authority, the legal authority to make decisions on your behalf. So when it comes to your finances, they can step in when you're no longer present or when you're not able to make those decisions. When it comes to your health, they can step in when you're no longer able to make those decisions. So these tend to be filed separately, the power of attorney when it comes to health and the power of attorney when it comes to finances, but they can actually be executed by the same power of attorney. So make sure that you have the right documentation in place. You've at least involved somebody that you can trust to make sure that they're looking out for the interest of your family and the interest of your loved ones to ensure that your assets are distributed in the way that you would wish for them to be distributed. Third thing when it comes to protection is conversation. Why is this important? Because it then opens up room for you to talk about exactly what it is that is concerning you. It gives the other person as well the opportunity to inform you of their wishes, of what they potentially have in place, of their assets, and it puts everyone in a position where things can be handled in a much more amicable way. But what I will say as well, in addition to this, is that when you're having these conversations, we're not going to go in very naive and think that, yeah, absolutely, by having this conversation, it's going to sort everything out. No, these conversations can sometimes take time, even years. And so to build that level of trust is important. And to come to the table with no expectations is also very important. Normally, you would hope that the people around you have been good to you, right? And for that reason, things should naturally fall in an order that is expected. But should that not be the case, should you come into that information, then I would hope to think that it's being delivered in a very kind way. And I would hope that whoever is receiving it is coming in with an open mind and with no entitlement, because when it comes to people's assets, no one is entitled to anything. Now, I understand that in certain cultures, perhaps living in the UK, I've seen incidences where beneficiaries have then gone on to do harm And those are things that you need to manage carefully. Use your wisdom in that case. If you do feel that there's going to be any harm that comes about from those conversations and that level of honesty, then it's down to you to manage that from a place of wisdom. The legacy side of it, one of the key things in this space is your values. What tends to happen today? Not many estates tend to get passed on beyond the third generation. Actually, by the second, third generation, a lot of it is squandered. There's very few families that have gone on to pass it to the fifth and the sixth generation. And this is purely a values system. So communicate to your beneficiaries from the minute that you are in contact with them. I think, let me speak about this from a parent child perspective, right? Or just a general family perspective. People need to know your values, and you need to communicate with people in a way and understand who around you is clear on your values, right? If you have similar values, then you're off to a great start. Make sure you're communicating what the values are. So you might be thinking that for us in this family, we're going to make sure that we pass down wealth through generations, because the aim is for our generations to continue to live in that legacy and to continue to be prosperous. We don't want any generation coming in where they have to start from zero. That's not what we're trying to do, right? We want to make sure that we participate in things such as charity. So from all the earnings that we have within these assets or this business, we're going to ensure that 10% of that perhaps goes to charity, and we're going to be supporting charitable causes. We're going to be supporting businesses that are taking care of the planet, of the environment, of people. And these are things that are going to stop a lot of contention, because if you think about the next generation coming, and their value system is not aligned with yours, they feel that perhaps this is more of a profit business where we're making profit at the expense of people, and they feel disconnected with that, then chances are that they're not going to continue to carry on your legacy in the way that you wanted. And that then leaves room for a lot of cracks to begin, a lot of intermediaries to come in with different ideas, and then the whole establishment will crumble. And I think if you think about perhaps Gen Z is a good example to use, right? They're a generation with a very different mindset to perhaps the boomers. So you might find a disconnect there because the cultural difference is quite huge. Now, to manage that, the next point in this being that you have to pass on knowledge, right? You have to involve your beneficiaries, family members, in the decisions that you're making, in the investments that you're making, in the businesses that you're running. There tends to be an assumption when it comes to young people and children that actually they shouldn't be involved in things, they should be kept out of this business. This is a conversation that should happen among the adults. But what we're getting wrong here is the fact that we are essentially building to pass on to the next generation. So I'm passing on something to the next generation when I haven't taught them how to manage it, when I haven't taught them the strategies behind the business, when I haven't taught them how we make decisions and why we make those decisions, when I haven't taught them the mindset around this business, I haven't taught them about the culture, I haven't taught them about the market, I haven't exposed them to any of the assets that we have, why we have them, why we've secured them the way we have, and what we intend to do with them. We're just thinking, okay, fine, I'm going to get to a point where I need to pass on these assets. So I'm going to pass them on to you without you having any knowledge on how to manage it. And so you might be lucky that you pass it on to somebody who's got a bit of, sense in them, and they might get the right advice, they might have the right people around them. But on average, you could also be passing it to somebody who has no knowledge of what you're doing, of how to manage any of this. And sometimes you might find that it is somebody who's in a very vulnerable position, somebody who's also very young, and they just really don't know what to do. And so it's up to us to make sure that we pass on the knowledge and the wisdom in addition to passing on the inheritance, right? In addition to passing on the values, we have to make sure that we're creating space to educate, we are creating space to provide a seat at the table, allow the young people to come in and observe what you're doing, engage them in conversation, right? Make sure that as you might not want to give them the detail of everything, but let them have insight into the decision making. Let them know how to think through these processes, how to solve problems. And so when it gets to a point where assets are being handed down to them and inheritance is coming to them, then they know exactly what to do. The other thing is you have an element called trusts. So your insurance can be written in trust. Your will can be written in trust. It can be put into a trust. And so when you're speaking to perhaps your legal team that is drafting your will, you might want to put your hand up and say, hey, I have heard that I could put these assets in trust. I could have a will in trust. I could have insurance in trust. And so, what I'm hearing on the ground is that when I have it in trust, this is potentially giving me the opportunity to preserve these assets for a period of about 125 years, give or take. And so, what does that look like for me? If you're very intentional about building legacy, then you're thinking about longevity in those terms. And so, the next generation that comes on after you is a generation that is potentially going to, the trust is going to outlive that generation, right? There's obviously pros and cons that come with being in a trust, and those are things that you need to engage with the team that you're speaking to put these things in place for you. Now, finally, I would like to say this on the point of preserving your wealth. There's no point in working hard and not making sure that you're doing things in a way that preserves your wealth. So, tax becomes another very important topic that you need to raise. So, how can you ensure that you're protecting your assets from tax, right? There's different ways in which you can get tax benefits on your assets. There's ways in which you can distribute some of your assets before you do die within a certain time frame to ensure that it doesn't trigger inheritance tax when you do pass on. You can also gift some of those assets, but again, it depends on the jurisdiction that you're in. So definitely when you're having this conversation with a legal representative, let them know that you're also interested in the tax element. Have that in mind and think about what would I need to do to ensure that my estate is protected from tax as much as is legally possible. So I hope this conversation has allowed you to think about a few different things, allowed you to think about legacy planning, allowed you to think about protection, because it's not just something that happens, when people are older and that's something you need to worry about down the line. Those are things that you need to have in place today if you're somebody who owns anything at all that is worth handing over or passing over to the next generation. It might be land, it might be your car, it might be your home, it might be some money sitting in some investment somewhere. I think have those conversations, have the right people and the right teams around you, and make sure that you're protecting your family and your loved ones. And in the event that anything unlikely, unexpected was to happen, because more often we think about, okay, this is expected because so and so is a certain age and, the inevitable is about to happen. But no, the people at risk are normally the ones who are not expecting some of these things to go ahead. And so it's important for you to begin to put things into place, structures and systems into place that are going to live beyond you and take care of yourself and your family. Thank you so much for joining us today, and I will see you next time.